This was a much better than expected number on the overall job creation. But watch these markets. So the markets are off their lows. The Dow futures are only down 13 points right now. John Hilsenrath, why is that? It's because this is not as strong as this job growth is. 213,000 jobs added last month. This report is not inflationary. So this is a Goldilocks report, if you will.
Right, and it's exactly what we were talking about right before these numbers came out. We saw a lot of people pouring back into the labor force after slow labor force growth in May, and many of those people who were coming back into the labor force were still looking for jobs. That lifted the unemployment rate to 4%, but that's really not a cause for alarm. A 4% unemployment rate is exceptionally low, and 200,000 growth of 200,000 jobs for the month is, again, exceptional growth. A pickup from last year. So it's a good report. The economy's on solid footing.
Lisa, with the 213,000 jobs added last month, that is above going into this report. The average so far this year was 207. So this number came in even above the average in 2018. And another thing to point out, John was talking about the labor force growth. The reason you saw this unemployment rate tick up is because 601,000 people came back into the labor force. That is a huge indicator of optimism.
Yeah, we think this is going to have a nice impact overall on the markets. Again, as you well put it, it's a Goldilocks report. We're still continuing to get some nice match with hiring, and so we're seeing those payroll goals come in higher, gains higher than we expect. But yet you're not seeing huge pressures on inflation. While it has ticked up, which is actually a positive thing, it's stayed year over year at that 2.7%. And again, I would agree with John that nice increase in the labor force participation is very encouraging. It expands the capacity available of workers, and it's indicating that people are continuing to be more optimistic about their prospects.
Jonathan Hoenig, no tweet from President Trump yet, but one number that jumped out at me is the sector-by-sector growth, that we had incredible growth in manufacturing. Manufacturers added 36,000 jobs last month. Construction payrolls up by 13,000. So again, this is spread far and wide. We did have a loss in retail of 22,000, but most of these industries, real bright spots.
Yeah, Medea, it's a fantastic report. Excuse me. Ironically, as you pointed out, the fact the headline number ticks up to 4% because the labor participation rate increases. Perhaps that's one of the reasons that the president, ironically, didn't tweet about it. The higher the labor participation, the higher the job number. In this case, it happens to be, in fact, a good thing. This is a fantastic report. You've seen that in the market. We were lower before it came out. The market, the Dow futures now have turned higher. Interesting, however, to John Hilsenrath's point, we didn't see the futures market for the bond market fall significantly, really at all. Meaning there is no expectation for inflation at that point. My only question, Dagan, is now moving forward. You know, a lot of economists posit that the Great Depression was really only a mild recession before Smoot-Hawley came along. So for my mind, as a professional investor, all eyes are now on tariffs. Everyone from big business people to small are worried about the potential impact, including inflationary, on their business. So the job number we know is good. What's going to be the impact of the tariff war that, you know, at least according to the president's own words, really starts today in terms of that trade war. So that's what's moving forward now that the number is out, and the number is good.
But Steve Forbes, these markets are looking at this number right now, and you see these futures turning around a 24-point gain on the Dow futures. What are you looking at in this report? Because there's a lot of good news.
There is a lot of good news, and it shows the economy is going in the right direction. And if we don't get a full-scale trade war, it's going to be a real boon for this economy. You'll see the stock market go up several thousand points if we get that cloud out of the way. But that is a cloud over there, and we have to remember, tariffs are sales taxes. And by the way, the household survey is another thing to look at in this jobs report. Didn't go up that much. So small businesses, they're improving, but I think there's still a lot of uncertainty out there, i.e. there's a lot of room to grow.
Lindsay, what jumped out in this report to you?
Well, to me, it was the perfect Goldilocks report. Again, it also means that the Fed is going to continue to be able to be maybe a little more dovish than hawkish, so that supports the markets. I'm just really impressed with the market's reaction to this report because it shows that the fundamentals of the economy here in the U.S. are winning out over trade wars and potential geopolitical concerns.
Christina, and that is the argument that you hear far and wide about why do we take on these trade abuses now, because the economy is strong enough to do that. And this jobs report certainly reaffirms that.
Exactly, which is the point I was going to make. This goes along with what President Trump has said, that now is the time. We have a strong economy, can withhold it. Will this last in the long term? Probably, we don't know. But right now, if there's a time where the United States puts its big foot forward and say, you know, we're not going to be taken advantage of, it is today. And this just proves it, that even though going forward, we're still seeing growth. Even labor participation, that was a big concern. You're seeing manufacturing, where often we look, higher, 36,000 jobs added for the month of June, much higher than the month of May. So all good signs.
John Hilsenrath, is there anything within this report, as you've dug into these numbers, that is worrisome? Because, again, the reason that the unemployment rate went up 0.2% is because there's 600,000 people who came back into the labor force. With that labor force participation rate, it's still annoyingly below 63%, but nevertheless, it is picking up. So regardless of how you read that, and then muted wage gains, which is great in terms of the Federal Reserve, is there anything here that you find troubling?
Well, I mean, the thing that I find troubling is just the risk that at this point in the cycle, the economy could overheat. You know, a 213,000 payroll increase is really good and it feels good. But this is the point in a business cycle when investors start making mistakes, businesses start making mistakes, and it feels good right now. But where are we going to be a year or 2 years down the road, you know, if this economy overheats and there's a price to pay later?
Jonathan, I hear you going.
And could I quickly, if I could quickly add, quickly just add to Mr. Hilsenrath, not only businesses make mistakes, but I think governments make mistakes as well. And one of them would be tariffs. Fitch Ratings was out just earlier this morning estimating that a trade war could cost global trade $2 trillion. That's not billion, that's $2 trillion. That, I don't know how one can make that suggest that could have any type of beneficial impact on the U.S. economy.
But
if that
Lisa,
occurs.
you know what? I have been very concerned about tariffs and trade fights with a wide range of other countries. But Lisa, this market, for the most part, is giving the administration, giving the president room to breathe on this, is it not? Because again, you see this bounce back in futures this morning, and this is when we're watching, just to be crystal clear about this, we're watching futures higher when we have got, when this is the beginning of a tariff fight with China that started today, Lisa.
Yeah, and so, granted, to the administration's point, we've got some good growth numbers. We've got very solid macroeconomic fundamentals. That being said, I think our view is really the risk overall and the rewards are balanced. So while you've got the positive top-down data, including the jobs report today, you've got very good corporate earnings, there are a number of geopolitical risks that could potentially disrupt growth. And inflation is ticking up, again, at moderate levels, but we need to keep our eyes on that. So again, in our view, any kind of tariff or trade war that could potentially dampen that economic growth still would be a negative for the market.